Good morning, friends, and thank you for joining us. My name is Jason Cogdell. I'm one of two benefits attorneys at ProBenefits, and my colleague Laura Bibb is with me for this regularly scheduled edition of our client webinar series. And our topic today is Form 5500 reporting for health and welfare benefit plans. This is a topic that we try to present annually in advance of the July 31st deadline for calendar year plans. And as we'll discuss in a few moments, the calendar year ERISA plans 2018 that ended on December 31st, 2018 are due July 31st without extension. So sometime in the April-May range each year, we try to present a session on Form 5500s in order to be of assistance to large employers that need to file and plan advisors. We've got some employers of various sizes on the call today, some large employers that are already filing, some that are on the bubble of whether they're required to file or not. And we've got some employers that may be under the threshold and may need confirmation that you're not required to file for 2018 or your most recent plan year. So we're going to do our best to address each of those categories today. As always, this session is being recorded, so if it's helpful to a colleague of yours, we'll provide a copy of the recording and slides to you sometime in the next couple of days. But we're going to hit on the basics, just a refresher of the Form 5500 requirements, who needs to file, what needs to be filed, and when do the filings need to take place. We're going to talk about filing scenarios, whether ERISA plans should be filed individually or filed all combined as a single ERISA wrap plan. And then we will also address your questions, which may be submitted through the question box on the control panel, or you may submit them to compliance@probenefits.com, and we'll get back to you very soon. Before we get started, I want to, on 5500s, I want to say a couple of quick words of update from our team at ProBenefits. Those of you that are working with us for admin lines of service, FSAs, HRAs, HSA bank accounts, or COBRA, even though that's really to come later, know that we have just transitioned, literally in the past few days, transitioned to a new administrative system that we're very excited about. This is the culmination of about 12 months of work from our team, communications over the last couple of months. What we did was we went out and picked the very best system that we could buy, and we've implemented it to be a ProBenefits system for our clients. There's a new employer portal for you employer contacts and admins. There's a new participant portal, which is fantastic. There's a brand new mobile app, which is a significant enhancement over what we already had, and frankly, the best I've seen on the market. So we're really excited about this. For those of you that are not working with us on those lines of service, we'd love to talk to you about our new portal. We think it's really elevating what we do, how we do it, and the efficiency and options for employers and participants. And those of you that are working with us through that transition, thank you for your patience and your willingness to work. We think it's really going to pay off by making your lives easier and making the plans work better for you and your folks. This is part of our 2019 webinar series. We have presented some recent webinars on the new systems, what we're doing, and the upgrades. The next one we have, which is next week, is for our HSA clients and what the new HSA platform and cards and mobile app look like. Our next compliance webinar will be on data admin systems, enrollment processing and data systems, and we'll share invitations with you for that session soon as well. But as always, me, Laura, and our team are available to provide compliance support for the employers and the advisors that are working with us. And these webinars are one of the ways that we try to support the groups we're working with to make sure that we are taking care of key compliance issues across the board. Now, getting to the topic of Form 5500s and why this topic specifically is important. Well, it's important because this is a mandatory filing for many large employers that sponsor health and welfare plans. To put this in context, most large employers have benefit plans that fall into one of two categories: retirement plans, and we're not going to talk about retirement plan 5500s today, but they apply to any employer sponsoring a retirement plan of any size, and they're typically handled by the retirement plan TPA. So that's almost one side of the house or one side of the ledger. And on the health and welfare side of the ledger, most employers that are large employers are required to file unless an exemption applies. Laura's going to talk about those exemptions in a moment. But where an employer is required to file, this is a big deal because it's a DOL IRS filing. The filings are not only required to be filed, and there are penalties if the employer doesn't file, but also these filings become publicly accessible on a database that's hosted on the internet, the EFAS2, and I'll show you that in a moment. But also they're accessible, of course, obviously to the government as the annual report for the health and welfare benefit plans of employers. So the government has access not only because they've been filed, but also because they're publicly accessible, and that applies to retirement plans and health and welfare plans, although we're just talking about health and welfare plans today. Now, the legal context here, where does this requirement come from? It comes from ERISA. ERISA is the federal law established in the 1970s that applies to employee benefit plans that are sponsored by an employer. So any employer-sponsored group benefit plan, generally speaking, is subject to ERISA. And ERISA means a lot of different things. The primary 6 things that ERISA means are listed on the screen: claim and appeals guidelines, fiduciary responsibility, the ERISA plan administrator, requirements that an ERISA plan have plan documents, a plan document and a summary plan description. COBRA and HIPAA are incorporated into ERISA as well. But as listed there in green, ERISA includes a reporting requirement, and that is the Form 5500, which is technically called the annual report from the employer to the Department of Labor saying, this is our plan, this is what the specifications of that plan are. So this is the broad legal context which sets the stage for some of the specifics as we get into what needs to be filed and how this works for employers.
And Jason mentioned we're going to talk through the who, what, when, and how. And this, we're going to start off with who actually has to file. And generally, all employers with a group health plan that's subject to ERISA have to file. There are some exemptions for churches and government entities, and that's a fairly complex analysis for those. So I would advise that if you think you fall under one of those 2 full exemptions, you may want to chat with your legal advisor just to make sure that you are getting that analysis correct, so that you don't wind up in a situation with a delinquent filing and penalties. We already talked about retirement plans must be filed, and typically, as Jason mentioned, that's handled by the TPA. But not all health and welfare plans are required to file. There is a special exemption for a plan that's considered to be a small plan under the Form 5500 rules, and that's where the plan has less than 100 employee participants as of the beginning of the plan year. So this small plan exemption is going to mean that employer is not required to file unless the plan is funded by a trust. So if there's a trust in place and you are under 100 employees enrolled, you would not qualify for this small plan exemption. And here's a detailed breakdown of that small plan exemption. Again, has to be unfunded, so no trust in place, or there's an insured benefit with less than 100 employee participants on the first day of the plan year. So the when part of the Form 5500 is the filing is due 7 months after the end of the plan year. So for a calendar year plan, a plan with a 1/1 plan year, those filings for 2018 are due July 31st of this year. So those are right around the corner. And then today actually is the deadline for plans with plan years ending in September. So if you have an October 1 plan year, and you should have either filed or filing today or filing an extension to give additional time. There is an extension available for employers. This is an automatic extension. I get asked quite frequently if there are any negative repercussions associated with filing an extension, and they're not. The Form 5558 is actually submitted via the mail, and it has to be postmarked by the deadline. And this form is sent to the IRS, not to the Department of Labor. So that's particularly important. And as I mentioned before, it's an automatic extension, provided that it's submitted timely, that provides an additional 2.5 months to file. One thing I do want to note about the extension is it's important when you're filing an extension that you include the proper plan name on that form. We see quite frequently that an extension might be submitted with one iteration of a plan name, and the plan name that's filed on the Form 5500 is different than what's shown on the extension form, and that can create issues for the employer. You may receive a letter from the IRS regarding that extension that it's been denied if that's not properly handled. So make sure when you're submitting the extensions that you use the correct information when you submit that. So what benefits have to be filed? Typically, we think of the top three here, the health, dental, and vision insurance. Those are common plans that come to mind, but they're not the only plans that are required to be filed. It's any group-sponsored plan subject to ERISA, and you can see the laundry list here of arrangements that have to be included in the Form 5500 if the employer is required to file. There are some asterisks here. For short-term disability, that's the first asterisk. There is an exemption from ERISA if that benefit is a payroll practice, so that wouldn't necessarily have to be included depending on how you have that benefit set up, whether it's insured through a carrier or it's just a payroll practice. And then on the second column, the wellness programs and EAPs, we have those asterisks there because those programs are subject to ERISA if they're providing medical benefits. So just make sure when you're looking at your Form 5500 and which plans you need to include that you consider the broad range of ERISA plans, not just the common ones that we think of. So the default filing scenario, this is the most common, I would say, is where an employer is filing multiple plans. So we've got an example here of an employer who sponsors 6 ERISA plans. The plan year is a 6-1 plan year, and there are 100 or more participants. And you can see here below that the health and dental have different insurance carriers, life, disability, or all together, and then the plan also has a health FSA. So the default filing for this group would be to file individual Form 5500s for 4 filings, 1 for each ERISA plan. And each filing is going to be due 12/31 following the 5/31 end of plan year. And typically we bundle benefits together that are bundled with the same carrier. So we would include life and the disability benefits together on one filing. So this is what this default filing scenario would look like where there are multiple plans. You can see we've got plans 501 through 504, and they're generally going to be named the employer name, so ABC company, group medical plan, group dental plan, and then we've put the life and the disability plans together. Our common filing scenarios where an employer has decided to put in place a wrap SPD. So if an employer implements a wrap SPD that consolidates all benefits into a single ERISA plan, and that might be named the ABC Company Health and Welfare Benefits Plan or something similar to that, we would have a single plan number, typically it's 501, and then the wrap consolidates all of those benefits, and we would file a single Form 5500 each year by the 12/31 deadline, and we would only have one Form 5500 filing, Plan 501, and that's the consolidated plan under the wrap. And this, even though there's only one filing, we would include all of the Schedule A's for those benefits that we identified in the prior slide. So now Jason's going to take us to the DOL's website, and we're going to take a look at a sample Form 5500.
I mentioned earlier that the filings, when made, are publicly available and accessible on the DOL's Form 5500 website, which is called EFAST-2. EFAST is just an acronym that starts with electronic filing. And this is the second version of their website that's been around for 10 years. It's very good. It's not necessarily the most high-tech thing ever, but it's all that's needed. It's very reliable. So this is the homepage of EFAST-2. If you're a large employer and you have previously filed, you can easily find your past filings that are available in EFAST-2. If you're an employer that's not sure whether you filed or whether a sister entity that you work with has filed, this is the place where you can look them up. If you can see the cursor on the screen there, I'm going to click on Form 5500 search, and it's going to take me to this screen. Typically, the best way to search is by tax ID number, but you can also search by plan administrator or sponsor name or plan name. For this example, and we're going to search for Apple Inc., not only because this is one of America's most popular companies and they happen to produce some products that some of us may use on a daily basis. Not only that, but since every slide we've shown today has two apples on it, when we went through our rebranding for ProBenefits not long ago, the company that we worked with for the rebranding, after getting to know us and talking about some of the things that we do in our business and we stand for, came up with the apple with the plus sign in the middle of it, the apple signifying health, an apple a day keeps the doctor away, as well as knowledge, apple related to, an apple for the teacher and education. So we're proud of that as our logo. But as we look at Apple Inc., the Cupertino, California version of Apple, and not the fruit or the logo, we see that Apple, once we pull that up, and this is the Apple Inc. in organized in California and co-founded by Steve Jobs. We see at the top some plans under the tax ID number for Apple, which starts at 94 here in this column. We see plan number in the second column, 001. That's a retirement plan. So Apple through 2017 has filed its retirement plan. That might be interesting to to look at. But what we're going to do is scroll down and look for their health and welfare benefit plan, which is 510. So Apple has a wrap plan where all the benefits have been wrapped into a single 510. Now, if you scroll down, you can see previous years of the 510, and even in previous years where they filed other ERISA benefits in the past. Before 2017, the last time they filed, again, because the 2018 calendar year plan is not due yet, we see Apple's file plan 510. When I click on that and download it, we see the form. And this is the traditional Form 5500 format, which really hasn't changed much over the years. We see that this is for the calendar year 2017. It's a single employer plan for Apple, even though it's a very large plan. And we see some of the specs: the plan name, the plan sponsor, Apple Inc., One Apple Park Way, Cupertino, California. We see that the person who signed it is Aldi Duffield of Apple, who signed it before the deadline last year. We see that there were 78,126 active participants at the beginning of the plan year. This is on page 2. We see down here a summary of the benefits that Apple provides. That Apple provides benefits both through insurance here in this plan funding box in 9A, as well as general assets. And when the general asset box is checked, that tells us one of two things. One, there's at least one self-funded plan. That might be medical, or it might be a benefit like the flexible spending account or the health reimbursement arrangement. There might be a benefit for which there's not an insurance schedule, but that benefits are also provided through insurance. As we scroll down, the schedules, which we think of as the information from the insurance carrier. What insurance carrier provided a certain benefit? In this case, this is a schedule from Aetna Life Insurance Company. As we scroll down through the Schedule A, we see that this is for a health plan. Probably not the only one Apple has, but they have a plan that Aetna is the insurer for. We keep scrolling down. There's also a Cigna plan. Apple as a company with employees in probably all 50 states, likely has multiple medical plans, but this Cigna looks health and dental as we see what benefits are sponsored in part 3. So typically speaking, and Laura, feel free to add anything to this. Typically speaking, if an employer is working with an insurance carrier for one or more benefits, the insurance carrier will send a schedule to the employer sometime after the plan year. Now, just because the employer receives it doesn't mean something needs to be filed. That employer might be exempt from the 5,500 requirement because they have under 100 participants, for example. What we do as the preparer, though, is we get the schedule from the employer, help the employer understand what needs to be filed, and then we transmit the information from the schedule onto this formal official form. We don't actually file what the employer gets from the insurer. Laura, anything to add to that?
Yeah, that's a great point. I know, having looked at several insurance carrier Schedule A, sometimes the carrier will send it and it looks very similar to this format that you see on the screen, and other times it looks more like a letter. There might be a letter cover head followed by some information to help the preparer create the Schedule A. So it does come in different formats. And I do want to mention, you mentioned the self-funded plan. Most of the time, groups with a self-funded plan will receive from the TPA a Schedule C. There has been a change within the last several years with regard to Schedule Cs and when those need to be included. And a Schedule C has to be included with the Form 5500 filing if the plan is paying for those administrative fees reported through a trust. So even though you may receive a Schedule C from your TPA if you're self-funded, you may not necessarily have to include that in your filing.
Thanks. In the interest of time, I'm not going to go through all these schedules. Those of you who are advisors or those of you employers may see, for example, this is a schedule from Life Insurance Company of North America, which is the long-term disability provider for Apple, or at least was in 2017. You'll see here that this list on the schedule who the consultant or broker was for this benefit, Mercer Health and Benefits, Chicago, Illinois, and it shows the amount of commissions paid for the broker. So one of the data points that the DOL is capturing is, in addition to size of the plan, what type of benefits is this large employer providing, how many participants, but also how much in commissions is being paid. Not because the DOL is monitoring insurance commissions, that's really a matter of state law and insurance oversight, but it is a matter of data that is collected and reported to the DOL. So this is certainly unusual filing from the standpoint of the size of the group, but it's not unusual in terms of what is included, multiple schedules, multiple benefits for a large plan. So just wanted to show you one example. And again, Apple is an example of a company who's wrapped all the benefits into a single plan, 510, the Apple Inc. Health and Welfare Plan. As Laura said earlier, an employer with multiple benefits that hasn't implemented a WRAP SPD would simply file one 5,500 for each benefit that goes over 100. And today, the goal of today is not to talk in detail about WRAP SPDs, but know that WRAP SPDs are an option for employers of any size, but certainly for employers that are over 100 and would be interested in filing one 5,500 versus multiple. The way we do it at ProBenefits is we don't charge more for multiple Form 5500s than we do a WRAP. We charge per schedule, per benefit. So effectively the fee is the same, but it's certainly more simple to have one 5,500 to review one, to submit one, to monitor one. It's just more simple. So some employers prefer that approach, even though it's not required. And Laura, I'll kick it back to you for compliance considerations.
Yeah, and just one other point about those schedules and those data points. We do from time to time see that employers may have different information than what's on the schedule. Most often it's the amount of commission or the participant count. And so we can adjust the Schedule A if the information from the carrier is maybe not what the employer has in their business records. So just keep an eye out for that, and we can assist with that. But some common compliance issues and mistakes that come up, we've got the top ones here. There certainly are some other nuances that can come up. The first one is failure to file for an eligible plan. This can include not including the correct schedules or not including all schedules. And that comes up fairly frequently if an employer doesn't realize that a benefit is subject to ERISA, or if there's a wrapped plan, consolidated plan, and perhaps not all of the Schedule A's got included. That can be remedied by amending the filing, but needs to be done as soon as possible after that mistake is discovered. Late filings without extensions. So if you've not submitted an extension to the DOL, or excuse me, to the IRS, as we talked about earlier, and you submit the filing past the filing deadline, it's going to be late, and you're going to be looking at some delinquent penalties. Well, we can talk about that in a little bit. Also, we see a single Form 5500 without a consolidated wrap. So an employer who doesn't have a wrap in place, filing a single Form 5500, and the Department of Labor can assess penalties for late or unfiled 5500s, but they can also impose penalties for incomplete and otherwise deficient filings. And so here, the failure to include all schedules that are required, or filing a single Form 5500 without having the legal documentation of the wrap consolidating the benefits, could be considered incomplete or deficient. So it's important to think about these compliance issues that come up when you're preparing the Form 5500 filing. So the consequences, 5500s are an area that's very costly. Some of our other compliance areas with health and welfare plans, perhaps there aren't penalties, or there are small penalties, but this is not one of those areas. If the 5500 is not filed by the original filing deadline, or by the extended deadline if you've timely submitted an extension, the penalty can be up to $21.94 a day, so $2,194 per day from the original filing deadline that Form 5500 is not submitted. So that, as you can see, that could get very expensive very quickly, from day one even. The DOL may not necessarily assess this maximum penalty, but as you can imagine, it could be anywhere up to that maximum penalty, and depending on the circumstances, if it's a willful violation, you may find yourself sitting with that large penalty. The good news is that employers who discover that they've not filed or not filed timely can correct those compliance deficiencies through the Department of Labor's Delinquent Filer Voluntary Compliance Program, and we refer to that. We love our acronyms in the benefits world, and this program has one. It's the DFVCP. And this is a great program for employers who've discovered that they either haven't filed or have missed a filing or have filed late. The penalties are reduced through this program. Essentially, you voluntarily admit that there has been a mistake, and you can remedy that and pay reduced penalties as part of that program. So since there's really no statute of limitations for the Form 5500 penalties, it's really best practice to go back and correct any late or omitted filings. Sometimes we run into situations where an employer can only go back so far because of records issues or getting the schedule information. But really, it's best to try to correct all that you can when you're participating in this program. This program is available until the Department of Labor discovers that you have a compliance issue. So once the Department of Labor gets involved and they discover the issue, you're not able to participate in this program. So it's really important as soon as you discover this mistake to work to remedy the situation. The penalties we talked about are reduced. They're $10 per day dating back to the original filing deadline, and there are caps included, $2,000 per plan year up to a max of $4,000 per plan. So if you've got a single plan and you've missed 2 or more years of filing, you're going to be looking at a $4,000 penalty. So that's, even though that's a significant penalty, it certainly is better than the almost $2,200 penalty if the Department of Labor discovers your error. And this is an area that we frequently assist employers with, full analysis on what needed to be filed, assisting with gathering that information and putting it all together, and also preparing those delinquent filings and walking you through the penalty payment process. So if this is something that you realize is a need that you have to clean up some missed filings, feel free to reach out to us and we can assist with that. And next, we've talked a lot about the Form 5500, but I don't want to forget the summary annual report. This is also a requirement that accompanies the Form 5500. The summary annual report is a very high-level overview of the information that's contained in the Form 5500. It's intended to provide a summary to the plan participants. So this disclosure has to be provided to the plan participants within 9 months of the end of the plan year, so within 2 months of the filing of the Form 5500. All insured plans have to provide this documentation, but there is an exception for unfunded plans, even if the plan has to file a Form 5500. So examples of this are an FSA or an HRA. As I mentioned before, we do assist employers with Form 5500 preparation, including full analysis of what's required, how it should be filed, details, consideration, looking at and seeing whether there are any missing filings that might not have been discovered yet. We have a streamlined process that's fairly employer-friendly to use. Data collection through either the employer or through your broker. We have a website for review and submission, so once the Form 5500 is ready for you to review, you're going to log in. You'll receive an email and we'll log into that website to review and submit the filings. And then we follow up in future plan years to make sure that the filings are submitted timely for future plan years. In addition to the Form 5500, we're also going to prepare the summary annual report and provide that to you along with ongoing support for other compliance concerns you may have. And Jason mentioned the fee. If you have any questions about our services or the fee, we can certainly follow up with you with more information on that. I do want to mention, as part of that review and submission process, you do need to identify a signer. Many times it is the plan administrator, but it doesn't necessarily have to be the plan administrator. But whoever's going to file needs to register with the Department of Labor through the EFAS system. And you would do that back on the website that Jason showed you earlier. There's a selection where you can register with EFAS and you generate a user ID, a PIN, and a password. So if this is a first-time filing and the person who's going to be signing hasn't registered yet, that'll be something that you'll need to do in advance of submitting the filing. Just as a reminder, even though the filing is electronic, the DOL does require that you keep a signed copy on file. So it'll be important to not only submit it electronically, but print a copy for your files to keep on file. Quickly, there were some proposed changes to the Form 5500 for the 2019 plan year. This was back in 2016. It would eliminate the small plan exemption filing and require a new Schedule J. This was a schedule that picked up some of the compliance reporting that's required under the ACA. But so far, nothing has really been done with this. The comment period closed last year, and we haven't seen any action from the Department of Labor. It's possible that this is going to be another regulatory change that just dies on the vine, but we'll probably see something if changes are going to occur, I would say, in the next several months. Typically, the Department of Labor releases the Form 5500 and instructions for each year in the fall. So we may see something between now and then, or we may see that there are no changes. But right now, there is nothing really to update you as far as these proposed changes.
Laura, thank you. And I want to thank those of you who have joined us today. I want to say a word about Laura and her team. Laura coordinates our Form 5500 service and has several individuals on our team that work with her, and they just do a tremendous job. We really went all in on 5500 prep a number of years ago, and right now we're preparing hundreds of 5500s for employers of all sizes across America, and it's become a big part of our business and something we really are committed to doing correctly, and I really appreciate all that Laura and her team do to make that happen. Thanks for your time today. I hope that you found this helpful. If you have questions that you'd like to submit, or some of you have submitted some questions, Laura and I are going to hang around and answer those questions now via the control panel, the ones that have been submitted by those of you that are still here. If you have questions that you'd like to submit, but you don't want to hang around now, you can submit them to compliance@ProBenefits.com. Again, compliance@ProBenefits.com, and we will respond to you via email. Again, thanks for your time today, and I hope you have a great rest of the day.